Good morning, everyone. This is Doug Campbell with Right Way Options, coming to you with the morning market preparation video for February 8th, 2018. Well, yesterday we had a nice little follow-through rally, but unfortunately, they kind of gave that up toward the end of the day and leaving us with a true concern, a very concerning potential pattern in the market. First, let's take a look at the naked chart here and notice that we rallied back up here, trying to break through this resistance level right here, and notice that we failed back down by the end of the day, was not able to get up through there, which means our downtrend is really still in play. And we have an ugly pattern here on the moving averages. Now, if you don't know about the blue ice failure pattern, please get a hold of us and let us know here at Hit and Run Candlesticks and Right Way Options. We'd love to show you this. This happens to be one of the actually one of the best shorting patterns that there is out there, in my belief, that we fail through the 50-day moving average, rally back to test it, and then show a failure pattern. Now, a shooting star does not necessarily constitute a failure pattern. We need a follow-through. And what does that mean? We need a true follow-through showing that failure has occurred at the 50 to move us maybe possibly back down to test lows or go even lower. Now I'm hopeful that that's not the case. All right, no one wants to see that occur. If I had my way, which the market doesn't care. Nobody has called me about what I think should happen. If I had my way, I would like to see us consolidate here for a little bit, just to spill off some of this volatility, to rest a little bit. But I cannot ignore this potential failure pattern. Now, currently, futures have been bouncing around here this morning, and we're pretty close to flat right now, but we've been down about as much as 100 points. So as earnings roll out this morning, that's going to be really important whether or not this gets better or worse. And there are about 250 companies that report earnings today. So keep that in mind. We've got a lot of earnings data coming in, and we're going to bounce around in here a little bit. Now, volatility is still very high. So it's, like I say, it's going to be really important how the market reacts to earnings reports. Could we come right back above the 50? Yes, we certainly could. And that would be about the best situation we could hope for at the moment, is get that bullish candle to come right back up through the 50. Keep in mind that shorter term averages are coming down to create a resistance point here, and that we have resistance, price resistance in the overall chart here on the diamonds as well. Let's take a quick look at a short term chart here of the diamonds, and I'm going to go to this chart here, actually, and remove price. Now, this is just a simple chart that is just a 3 exponential moving average, an 8 exponential moving average, and a 34 exponential moving average. And you can see here on a 15-minute chart, we still have some issues. When we drop below here, we run into problems, and we came back up. We attempted to hold right in here, but on the diamonds, we fell below on the 15-minute chart, which means a rally back could simply be a rally back to test this as resistance and then fail. And if you need an example of that, all you got to do is go back here when this all started right here. Very similar, right? We cross above, fail, and then we start showing failures underneath that 34 EMA before we decline. So we have, price history that shows that this is very possible, and right there it is. in this chart on that 15 minute. So still, even in the 15-minute chart, we really haven't repaired this downtrend yet. We've got, downtrend still in play here on this chart. So not the best situation for us to look at. Let's take a look at the SPY. SPY, very much the same situation. It adds in another problem here and another benefit. It adds in a problem that we failed almost directly at price resistance. And we pulled back and dropped below the top side of this support level right here. So that adds a little bit of extra complication into this trade. Notice we do have more support here. We could hold or find a hold all the way through this range. So all hope is not lost. That is for sure and for certain. But let's take a look now at those moving averages. In those moving averages here, we see basically the perfect blue ice failure pattern set up with an inverted hammer here, failing right off the 50. So not a good sign for the SPY. Now, again, it's critical that we get a follow through. If earnings come in good and the bulls step up, we may not get that failure pattern, and that could move us into that consolidation that I'm kind of hopeful for. Let's also take a look real quick at that short-term 15-minute chart and notice the same pattern exists here. And notice this 15-minute downtrend here has not been breached yet. We've not beat it. And so breaking back above and then failing below, potentially testing here for a failure, not so good. Now, obviously, it can change very quickly. If we can get back above and hold it as support, we could then potentially rally. Just know we've got a lot of work to do before we're out of the woods here in the market. All right. Now I can show you basically the same situation here on the Qs. The Qs are a little bit stronger in the sense that it actually came sharply above the 50-day moving average and then gave it up toward the end of the day. So you can see it right there, just barely giving it up, which gives us just a little bit of edge here in the Qs, and also a nice support in here that it can react to. So we'll have to see what happens here as well. And unfortunately, if we look at that short-term chart here in the Qs, we have a very similar situation going on here. So watch this stuff closely. A lot of nervous energy right now in the market. The market's moving around quickly. Price actions are volatile. So you've got to be careful. You've got to protect yourself and choose whether or not you even want to risk in this market, because those reversals can happen just so quickly. Let's take a look at the VIX. Now the VIX started down yesterday, but toward the end of the day began to push back up, unfortunately, and that kind of really displays that this trepidation that we have in the market. The market is just like it's walking a tightrope right now. Any misstep could really make for a quick reaction move lower, or potentially push us higher. Those bulls could step in and say, this is it, it's time to move in. And I couldn't tell you which one is going to happen. It could either direction. And unfortunately, with the VIX so high, it could happen in about half a heartbeat. So be careful of that. T21 22 is displaying that we are down here in the bullish reversal zone. We did pick up here quite a bit yesterday, but we have not reversed back up yet. And notice that the fact that we did pick up gives us an opportunity to move lower. So watch that close. We're just really at a point of real danger here. In the market, it could go either direction very, very fast. Okay, so watch that closely. Again, on the earnings calendar today, we had about 250, just short of 250 companies reporting today. This morning, we're going to have reports from, big important companies, Philip Morris, CVS, Kellogg's, Twitter, Yum Brands. And then after the bell, we get equally important earnings reports out of AIG, NVIDIA, Expedia, all of those kind of companies reporting. So we could see a lot of moving around yet. It's really going to be up to those earnings to see if we're going to be able to hold on. On the economic calendar, there's really not much going on here. We have a day that's full of really non-market moving events. 4 Fed speakers today. The key focus this morning, the only real market mover on the calendar today, is the weekly jobless claims. Now, jobless claims are expected to come in strong. Again, showing that come in weak, showing strong labor demand is still in play. So keep that in mind. That should be a relatively positive report as long as it doesn't come in too strong. Lots of positiveness or something there coming in seems to be shaking the market here when it comes to jobs. So keep that in mind. With that, folks, I want to wish you a very, very good day. Be really careful. Be cautious. Remember, you don't have to trade every day to be successful in the market. As a matter of fact, if you just stand aside at times, that can be one of the best positions that you can have. Remember, all it takes is a little bit of relaxation here. We spill off some of this volatility, and cooler heads begin to prevail, and we'll pick up a direction that is easier to trade than trying to fight a high volatility market. So be really careful as you plan your day. Everyone, take care. Have an awesome, awesome day. I'll be right back with you first thing tomorrow morning, Friday morning. Everyone, take care.